Hello everybody and welcome back to Financial Trading Basics. This is part 8, portfolio building. It's been a while since I've made a finance or economic, video, but I just wanted to give some updates on my businesses, my trading activity, and talk a little bit about economic theory. But just a couple updates on my businesses. I gave you a more in-depth update on the alcohol, the CBD enriched alcohol patented company on a different video. But since then, even since that video, we've seen the United Nations reclassify or take cannabis off a risky narcotics listing, which again, that is still, forget the economic arguments. It is a biological certainty that stress cells demonstrate ligands for cannabinoids. It needs to be a step further. It needs to be actively proliferated as a medical, not a medical substance. I'm not trying to get into the legal terminology between a medical device for the FDA and marketing claims. I'm simply saying that there's no reason cannabis should not be globally legalized for health reasons. But we've seen further rescindance or taking down cannabis classifications at a global level. We've also seen the United States House of Representatives pass the MORES Act. I'm not going to get into the legislation, but it probably won't pass in this the Senate because Mitch McConnell's a fucking retard. But at least it passed. I mean, for health reasons, it needs to be legalized. But I'm following everyone's following the Senate race in Georgia closely. But if the Georgia Senate seats go to the newcomers, it looks likely that the bill will certainly have to be reintroduced because Congress adjourns on the January 3rd, and Georgia votes on January 5th. So the legislation will have to get reintroduced, but that's also looking very strong again for cannabis classification. Again, not super relevant for the CBD enriched alcohol. The bar and restaurant that I've referenced in this series or in another lecture somewhere, Adela's on Oak, is now open in Columbus, Ohio. I think it's 1485 Oak Street, and that's in the neighborhood of Old Town East. It's a great little place, great vibe, great food. We have vegan and meat options, so you should definitely check it out if you're local, if you can. It's family-owned business, great couple, great family. Trading, I've been trading a decent amount. Again, I'm still watching the financial markets pretty much all of the time, but just trivial amounts of money just to be active. I've been trading options more. I haven't made one of these videos in probably a year and a half. But now I'm much more familiar and I've taken a lot of options trades. I still like to initiate my trades with equities positions and then hedging options. For me, the spreads are just not all of that exciting in comparison to just trading the equity. I do like options for hedging, and I do like options for more longer term plays. Like I said, I like to get into a trade, get in as heavy as I can intraday. I don't hold open positions overnight, at least not with like 10x cash flow I can cover any leverage or any open position that I have. But I do like options for longer term price movements, like 6 to 12 to 14 months out. The spread of the entry position is not going to be super relevant over a 6 to 18 month move. So I haven't been super successful on any of them. I've made a couple wins, a lot of small losses, but I do like options for longer term positions or movements. And now going to talk about just allocation of money and how I think a small retail investor such as myself, again, I started with $6,500, and since then just how to trade and manage money in a way that you can grow a portfolio with not a lot of initial capital. Let me restart the video just so I have enough time. Alright, we're back. And so Another thing is I've held my initial Bitcoin position that I've referenced and made a couple of videos about since 2015. I will be scaling out of that. Today, the Bitcoin's right around 19,000. My holdings are right around $270,000. Like I said, I expect the peak to between 50 and 100,000 in the next couple months or so. Could be longer. The run could be more sustained. There's definitely more capital investments from institutional people. There's definitely more infrastructure. And again, I was 100% sold in 2015 on the use case of large financial transfers, business to business, and maybe in the longer term consumer use of Bitcoin specifically, not in any other cryptos. And I don't really trade crypto either. I'll probably make a couple swing trades on this bubble, or not bubble, but appreciation and depreciation cycle. I didn't mean to use the word bubble in the typical financial sense, but I just wanted to talk about allocation of money. The purpose of business is to make money. And how do you make money? Well, you try to establish stable revenue streams. But the simple thing is whether you're talking about the largest businesses, small business, trading patterns, there's really no such thing as a long-term stable revenue stream. You can invest, you can have cash, it can depreciate. You can invest in real estate, it can depreciate. You can have shitty tenants. You can have natural disaster, get fires or floods. You could start a business that works for 10 years and then goes out of business on the 11th, or works for 150 years and goes out after 160 years. So, like for estate planning, and what's the best approach to managing money? And it's diversification. Not diversification of finances, but diversification of talent. Diversification of skill sets. Because as long as you can, again, have some sort of investing acumen, some sort of current events awareness, diversification of financial assets, I'm not going to go as far as to say financial planning at the industry level is fraudulent, but most money managers simply spread money around in a way that they minimize losses, but the losses are almost guaranteed, just because of how the market functions. You want to find those 1, 2, 3, 4 companies that you really want to be in heavy. Market indices to me is bananas. Yes, again, I'm not going to do a 40% this, 10% that. I don't believe in that. But it depends the portfolio level you're working with. But the thing, and I pretty much hit all of the corners. I've started companies. I've raised money to start a company. I've started the alcohol company. I raised money for the dispensary, which is no longer a thing. Or started a group to help raise the money. I trade in the open market. I've invested in other people's startups, and when I scale out of the Bitcoin, I will be buying an established company or established revenue stream. I'm looking currently. I like distilleries, obviously, for the complements the alcohol company. I'm a big fan of restaurants. Just waiting for till there's clear skies for COVID with the vaccines and whatnot. And so I'll be acquiring another company or two over the next probably 2 to 5 months. But the thing that I like to do, like my approach right now, is scale out my trading profits, buy a stable business as much as I can, and that's what I like, buying a business that's been operating for 25 years and someone's retiring, or doing a startup. I think anyone with a small portfolio, like sub $1 million, maybe you have a good job. If you're sub $100,000, I think you should trade, you should invest, whether it's just your income is just your job or whatever. Set aside, again, $100 a week. That is how much I can lose and not think about it, and treat it just like an expense like food. If you're $100,000 to $1 million, I really think the best thing is to buy an established business. Don't try to hit a home run. Try to buy something that's going to stay in business, make you, for example, I'm looking at businesses $250,000 to $1 million. Typically, I don't say typically, but a lot of buying opportunities, you can put 30 to 60% down, have some sort of decent seller financing. I have cash flow positive businesses now, so I can get small business loans. There's also businesses you can buy that are pre-qualified for SBA loans. But I really think for someone like, I'm 27, for the 18 to 35, I think the first thing you should do is trade some and then buy and establish cash flow. Even more so than do a startup. I've already referenced, I think, the mentality of quit your job and go for it. I think that's fucking stupid. I would personally trade a chunk of $1 million or a guaranteed 100K a year that I can trade on, live on 50K and have true risk tolerance of $50,000, or take $1 million and invest it in a startup and kind of hope it works. To me, that's a no-brainer. I would buy the stable cash flow. But even like I said, for let's say your estate planning for maybe your 40, 50, 60 going on retirement, if your portfolio is substantially over $1 million, to not buy a business to me is carnivally stupid. If you're in a position where you've ever trained a manager, dime a dozen, go find a business that makes you $250,000 a year, take $100,000, train a manager, and like the risk reward on that to me is tremendous, because typically people 5, 10, way more than that, millions of dollars, they're more exposed in the open market. And again, most money managers strictly do not have the economic, the mathematical, the psychological, the societal understanding to diversify in a way that makes any sense at all. Yeah. So, and another thing I want to talk about, economic growth in individuals in society. It is much better for society for people to be actively trading 100% of the time. Even people with good retirement accounts, for the society level, like I'm not saying go spend all your money or go invest all your money in a super risky way, but for cash flow at the society level, it is much, much better for economic health and economic growth to still have some risk tolerance to invest or to buy things even in retirement. And that's why I said, that's why I recommend businesses. Again, real estate, everyone knows about that. I more so like businesses than real estate. I would not like to manage tenants. I guess if you're managing a commercial building or a big apartment, or you have, again, a manager to do that business, it's the same thing. But I don't like to keep a lot of cash. I don't think anyone should keep a lot of cash. I don't say that, but cash gives you availability to make moves when big volatility hits, whether it's real estate, business, stocks, blah blah blah. But I also like, just on a personal fun note, I also like antiques, like people can, or not antiques, but just like luxury items that you can invest in. I think those are good investments too, just from a trading interest perspective, personal interest. It's interesting to me. Yeah, so that's what I think, just some ideas and concepts for portfolio building. I really wanted to stress, I think more people should actively try to buy businesses as, and again, right, you buy a business with $250,000 in cash flow, live on 100K and go invest 150K back in the open market in some extremely risky options. And then you hit big there, and now you have $150 million. So that is, to me, that is the best way you build a truly retail portfolio to multi-million or billion-dollar valuations. Thanks for watching, and check back for more.